Bitcoin, please go to moon. Stop going sideways now. Don't ever say we going down to 1K, but Mr. Novogratz say we have bottomed out, Novogratz is bullish. Bottomed out, don't ever rise is bearish.
Bearish target of 13 puncher.
Novogratz is bullish.
Bitcoin could be at 40,000.
Let us go to moon.
Yo, welcome everyone to today's cryptocurrency price prediction and technical analysis live stream. Bitcoin right now for the past few hours has simply been moving very in a straight line. We are right now still at approximately 95,300 US dollars. We are right now still trading in the horizontal range on the 1 hourly time frame, after getting a push towards the upside, literally directly towards our major price target of this giant golden Fibonacci ratio. But on today's cryptocurrency live stream, I do have a lot of things to talk about with you. We are going to talk about the order flow. Now, of course, if you are in our free VIP Discord group, you probably know something I posted about earlier today in the morning, and right now it is actually playing out some kind of very nicely. Bitcoin is getting a very small push towards the upside. Also today, we need to talk about the Stochastic CG oscillator on the daily and on the weekly time frame. We are going to talk about two very important trendline areas of resistances. I'm going to show you the bearish Elliott wave count on the daily time frame with the exact targets. We are going to talk about more of a local bearish Elliott wave count on the 1 hourly time frame, but also we need to talk about the next potential trading setup. I really do believe that maybe even in the upcoming days, we could be offered another short or a sell trading setup right here, especially if Bitcoin is right now going to get another very small push towards the upside. That is, of course, why I really do hope you are going to enjoy today's cryptocurrency live stream. And also, before we start, sure, of course, press up the like, as Tadas Jokesas 2956 is right of saying. And also, of course, I want to welcome everyone on the stream. Apple Bay, welcome to the stream. Hassan Dezex, welcome to the stream. Bollinger Bands tight AF. That usually means that a big move is going to happen very soon. Ali Primo, welcome to the stream. Karen, grow your back. Primus Loy. Okay, welcome everyone that is right of joining. I'm not even going to try and pronounce everyone's names because it does look like the names are quite a challenge for me at least. But yeah, let's go right now straight into the... I'm here to from Essen, Germany, bro. Cheers to Germany right now. Hyper, please make me a baby. Okay, very interesting comments. Let's go right now straight into the charts. Let's talk about Bitcoin price prediction, Bitcoin technical analysis. What can potentially happen in the upcoming days from this specific horizontal range? Now, you probably remember from my last video right here, I was talking about the range, but not only about the range. We were talking about two very important trendline areas of resistances. Now, when we go on the 30-minute time frame, we go with the trend line, we connect our lower highs right here. Clearly, this looked like Bitcoin was trading below some kind of an important trendline area of resistance. The thing is, I was also going on the line chart, showing you another one. Going right now only with candle closes. This one right here was beautifully respected because what you can right now see, we are right now creating this specific trend line, connecting the high right here and also the lower high. This area, the trend line was also beautifully respected, but right now, Bitcoin broke it towards the upside. However, the breakout, you be the judge, but at least looking at the volume, nothing really spectacular. We broke the level because, of course, we need to be moving towards the right. We are moving, of course, forward. That is why we are breaking the level. Nothing major, just a small push toward the upside, another push down. So right now, Bitcoin, if we say this right here is a successful breakout, I mean, definitely, I wouldn't be going with a long trade right here. But yeah, the trend in here is getting a break towards the upside. Nothing major if you look like that, because volume is pretty much almost non-existent. Now also, if you are in the free VIP Discord server, today in the morning, I posted something like this. Major short trades have been opening for the past hours, forming a big bullish CVD divergence. So what you're going to see right here, quite a significant push towards the downside on our CVD indicator. So what does that mean exactly? It is simply going to mean a lot of selling pressure is coming in the market, not able to push the price lower. Why not able to push the price lower? Because we are forming right here another higher low. But also, most importantly, this area, this price action right here, look right now, Bitcoin price, look at the CVD indicator, and look at the open interest. Major pump towards the upside, major dump towards the downside, while Bitcoin, at least at this specific area, let's just say from here to approximately right here, it has not really been doing that much. What does it mean? You can see insane open interest increase. People are opening brand new positions, CVD indicator getting a push towards downside, which means people are shorting Bitcoin exactly at this specific area. Are we moving really down exactly in this specific area? Not really. We got a very small push down and then another push towards the upside. So for the past few hours, quite a significant bullish CVD divergence has been taking place on BTC. That is right now why we are getting this very small rotation back towards the upside. So for the past few hours, sure, it has been very interesting in terms of the order flow right here. But to be honest, in terms of trades, I haven't taken a single trade today. I do remain in my long trade for on Bitcoin from much lower. And also I am right now still in my short trade on Bitcoin, on Ethereum, on XRP, and also Solana. I'm holding 4 short positions right now to potentially see if we are going to be able to get a bigger push down. But in terms of the order flow, a lot of people were bearish. They were trying to push the price lower, but they unfortunately were not successful. Bitcoin simply right now got another very small push towards the upside right here. Now, something that is also very interesting and something that I'm right now definitely looking at is the Stochastic CG oscillator. Now, if I'm correct, I'm not 100% sure. Of course, if you want, you can correct me in the chat. But if I am correct, I am the only one that is actually looking, at least on YouTube or also on Twitter. I haven't seen anyone talking about the Stochastic CG oscillator. This indicator, in my opinion, it's actually a very nice one, especially when you look at it on the weekly, daily, and especially if we are then suddenly forming some kind of a double bottom or maybe even a double top pattern. Right now on the weekly, we are literally exactly in the overbought area. Tomorrow, we are going to pretty much get a brand new weekly candle, right? And we are going to get it in the next, let's just say, 4 hours. So probably this specific indicator is going to do something like this. Now, last time we topped on the Athlers. What happens then? We got a push down. Also right here, we topped. We got another small push down, but then suddenly we got we got another push up, push down. But the most important thing is we are going to go in the overbought area while Bitcoin is pushing towards the upside. Similarly as right here, and also if you look like that, we hit the overbought, we got some kind of a push down. I'm trying to approach the chart again as objectively as possible. Being in the overbought area, again, you be the judge, but it really does look like it is going to be some kind of a bearish Bitcoin indication. That is why potentially we might be looking for a bigger rotation back towards downside. Not only on the weekly, we are in the overbought. Let's go on the daily time frame, because the story is going to be exactly the same. Overbought right here, we got a push down. Overbought right here, small push down, nothing major. Overbought right here, push down. You get the point, right? So we are in the overbought area. Probably tomorrow we are going to be, I don't know, maybe going slightly lower right here. Definitely we are going to see. But in the overbought area, we should be slightly more careful, because simply, historically speaking, looking at our historical examples, usually we do get a push towards downside after we are hitting the overbought on the Stochastic CG oscillator. So that is actually one of the reasons why I really want to be talking about the bearish Elliott wave count with the exact targets and also what is going to be more of a local bearish Elliott wave count looking right now on the 30-minute time from here. So let's go first of all on the daily. You probably already know exactly what I'm paying attention to right here. I am going to go on the Bybit chart because, to be honest, at least as of right now, I do prefer the Bybit one over the Coinbase chart. So we are going to go with this one, where of course we have been identifying that Bitcoin got right here an impulse, correction, impulse right here, another correction, and right now we can be expecting potentially another push towards downside for us to finish the bigger 5-wave price structure. So this Elliott wave count right now remains my main one, and also it still remains, in my opinion at least, the highest probability one. So what are some rules that Bitcoin is right now still following with this count? The second Elliott wave usually goes at least towards 0.5 Fibonacci retracement, if not higher. Did we hit this rule? We go from the high back towards the low. And you can actually see, let me turn this off. You can see we hit almost golden pocket. We actually hit the 0.5 Fibonacci retracement level, took the liquidity above the high, and then we got it pushed down. So this second Elliott wave is, it is very nicely respecting the Elliott wave theory. Then another important thing is, what is the target of the third Elliott wave? And usually it is 1.618 Fibonacci extension. So we go with trend-based Fibonacci extension here. We go from the high towards the low, back towards the high, and we go with only 1.618. Was the level hit? And the answer right here is going to be no. 1.618 using the normal chart, not the logarithmic one, has not been hit on BTC yet. If we go with the log chart, yes, the level was hit. And also what you're going to see right here, the golden Fibonacci ratio was also hit, and I'm not even joking right here, literally to the exact dollar accuracy. The exact high was, let's just see, 367. If you look like that, it was front run just slightly by, let's just say, $100. But nevertheless, let's just say we hit the golden Fibonacci ratio quite nicely, let's just say like that. And then also we hit the 1.618 using the log scale chart right here. Now, if you're going to go with Coinbase, you could potentially right now say this right here was the first impulse, or this one was the first impulse. If we go with this one, what you're going to see, no logarithmic scale from the high to the low, back towards the high, 1.618 was hit. So that is why right now, if we go with the log scale, no log scale, doesn't really matter in my opinion. The most important thing is we know the primary direction. So the primary direction, I would still say, is this specific bearish Elliott wave count, looking for another fifth Elliott wave. So that is why in the upcoming days, especially if you look at the Stochastic CG oscillator on the daily, on the weekly, it really would make sense for us to get another push down. Again, maybe some of you in the comments are going to say to me, bro, you are going to be completely wrong. If Bitcoin right now does get a pump, definitely, if we get a push up, you're going to say, bro, you were wrong. The thing is, I don't know what is going to happen. You don't know what is going to happen. I'm just trading right now the chart. I'm trading the highest probability. And looking right now on the weekly, on the Athlers, and also on the daily, looking at the Elliott wave scenario on the weekly and also on the daily, on Bybit and on the Coinbase chart, I would say it is slightly more probable we go lower, we take the liquidity below the recent low for us to actually then finish our bigger fifth Elliott wave. Also right now, what is the technical target of the fourth Elliott wave? We are going to go with Fibonacci retracement from the high towards the low. And the only thing we need to apply right here is going to be the fourth Elliott wave template I have, where you can notice that we definitely have already surpassed the 0.236 and also the 0.32. We came very close towards the 0.5. Now, have we actually touched it? Yes, on the logarithmic scale. Bitcoin touched the 0.5 Fibonacci. That potentially right now could mean the top is already in, or if we are going to go just slightly higher, I would still allow for our 0.5 without the log scale to be hit, 98,400, and then we move lower. But the most important thing is, this count, in my opinion, the highest probability one, and also currently it does look quite nice. So Because of that, we just need to be paying attention towards our 0.5 if Bitcoin right now is going to go just slightly higher towards the upside. Also, if you're going to go with the Coinbase chart here, let me also remove this zone here. We adjust our 4th wave here. Fibonacci from the high back towards the low. You can clearly see 0.5. No, it has not been hit. If you go with the log scale, exactly the same story. The 0.5 was actually hit already a few days ago. So looking right now at this, I would say like that. If Bitcoin is going to get another push up, that being said, we continue higher, take this specific high. Sure, we can still be looking to add something to our short trades, approximately at the 0.5, but only if we are then going to get a rejection back down. More about the exact trading idea slightly later. But the only thing I want to right now point out here is that 0.5 is one of the most important levels Bitcoin should not break up if this specific bearish Elliott wave count right now wants to be valid. The thing is, breaking the 0.5, technically, we are invalidating the 4th Elliott wave, because one of the rules, bro, I mean, let me right now share with this. We go with, if you're in the free VIP Discord server, go in the resources, and here you're going to see Elliott wave theory. Copy the link, or click the link, whatever, and then we are going to go on this exact website. You're going to see something that I'm sure people on YouTube don't really show you, do they? Because I really want you to understand everything we are talking about here. Let's go with the, I think, it is somewhere, wait. Let me see where it is written, because impulse with extension, right here. Wave 4 is 14.6. Usually I don't use this one because crypto is just too volatile, and that is why this level gets broken almost immediately. 2.368, 0.236, 0.282 of wave 3, but no more than 50%. So 50% of wave 3 is the 0.5 Fibonacci retracement. So the rule, one of the very important rules in the Elliott wave theory, is that Bitcoin does not go above the 0.5. If this one right here, this bearish Elliott wave count wants to stay valid. If we go higher than this level, probably we are not talking about the 5-wave structure back down. Probably then we talked about some kind of a 3-wave, and now we are forming some kind of a part of a correction at this specific area. I don't even have another scenario here outlined right now for BTC. I'm going to look at it after potentially the 0.5 does get broken up. But at least as of right now, the theory, or actually the Bitcoin is following the theory. Wave 4 is, of course, I mean, those levels right here of wave 3, but no more than 50% of wave 3. So at least as of right now, everything is valid according to the Elliott wave theory. Let's just see if this specific level is potentially going to get a breakup, or potentially if it's the right one still going to hold, and we are going to move much lower back towards downside. Also, let's go on the actually I'm going to leave all of the numbers here. Let's zoom in on the 30-minute time frame. Now, with this first push down, some of you are potentially going to say this right here is not an impulse, because what you can right here see: impulse, correction, impulse, correction, impulse. Clearly, actually, this is also, I'm not sure where it's written, but there is a rule. Let's see. Yeah, right here. Wave 4 does not overlap with the price territory of wave 1. What does it mean? We should not go the wave 4. For example, if we right now say this right here was an impulse right here, we got a correction, another impulse right here, another correction, another impulse. Wave 4 should not overlap with the territory of the wave 1. Did we go in the territory of wave 1? Unfortunately, we did. So you can see here, if we go with the low here, we clearly touched the low right here of the first impulse, right? So technically speaking, looking right now purely at the theory, this count is not a valid one. However, I would say if Bitcoin is potentially going to get a rejection at one of our areas of resistances, I'm going to share with you later, I would still say 1, 2, 3, 4, 5. It is, I would still allow it simply because crypto is usually slightly more volatile. And that is why saying that this right here is an impulse, push up, and then we get another push down, I would say it's a valid one. But of course, ideally, this does not happen. So if we right now say, that we are right now breaking this specific rule, technically speaking, we should actually be expecting higher targets on Bitcoin, maybe even in the upcoming days. But personally, at least right now, I would like to trade from level to level, especially knowing that we did hit the 0.5 using the logarithmic scale right here. So I can right now actually show you a very simple trading setup and also a very simple plan. Doesn't matter if we are right now in the fourth Elliott wave, no fourth Elliott wave, uptrend, downtrend, doesn't really matter. The most important thing is in trading, you look for buys on the move down. You look for sells on the move up. Are we right now moving up or are we right now moving down? You be the judge. In my opinion, we are moving up. So that is why ideally you are looking for a sell trade. You're looking for a short position. That is why, of course, as I said before to you, and also in the video, I'm holding a short on Bitcoin, on Ethereum, XRP, and also on Solana. So what we can right now say here for BTC. If we are going to get a push towards the upside, what is the first area of resistance? What you can right now see, we are going to identify. So first of all, let's just say that we are not going to go above this high. In this scenario, it's an impulse, correction, impulse, correction, impulse. The targets are going to be, we go with Fibonacci, high towards the low. We go with the second Elliott wave here. So we are looking for at least 0.5 Fibonacci retracement level, which surprisingly, or maybe even not, it is aligning kind of nicely. Not exactly, but approximately here, we have the liquidity level, our recent highs, and also the anchored VWAP. So we go with the anchored VWAP from the high, bam. Almost exactly at the 0.5. We also do have the liquidity and the anchored VWAP. Those targets, this right here, is the first important area of resistance. And usually it is actually hit at least because this 0.5 is the minimum target of the second Elliott wave. So ideally we are looking for right now a push up. Again, the Orderflow would agree with us because we got a major push down here. Bullish divergence, of course, something I did say earlier today in my free VIP Discord group right here. We are right now getting a push towards the upside, ideally at least towards 96,000 US dollars. Then, of course, if broken up, we are going to look for the most important volume levels. Remember, overall speaking, we can still say Bitcoin is moving in a range. And here, actually, I'm going to remove this level and also this level from the chart. I only am right now paying attention to those two Fibonacci levels, 0.5 and the golden pocket. If we start breaking the golden pocket, I would believe potentially we are then going to go even higher, as we said before, towards our upper 0.5 Fibonacci level, towards 98,500 US dollars. But we trade from level to level, right? And also, if the move right here is going to look corrective tomorrow, once the market is going to open, stock market, I mean, once it's going to be Monday, pay attention to the volume. If volume is coming in, we are moving more impulsively up, definitely. Top of the range is then going to be our next major price target. But the reality is, at least as of right now, it looks more of a choppy price action. So the golden Fibonacci ratio and the 0.5, in my opinion, are still very much valid targets. So the value area high, surprisingly or maybe not, it is coming in exactly at our golden pocket. So the plan is very simple right now. If potentially you're not in any short trades, what I would do in your situation, I would look to fire a short trade, the first one, approximately at the 0.5. If we do get a push up, push down right here, close the candle below the liquidity level, potentially you can be looking to enter with some capital at this specific area. If higher, if there is no reaction here, we look for the golden Fibonacci ratio next. Look for the reaction here. If there is some kind of a bearish candlestick pattern, especially if the move up looks corrective. That being said, low volume, choppy price action, not really moving towards the upside with major green candles. This is of course also going to be a red flag, probably a BC correction. We are looking for lower here. In a case we break those levels like butter, high volume, look for higher. We are then looking for the top of our range, approximately, at least towards the top of the range, if not even the 0.5, as we said before, 98,500 US dollars. Very simple game plan right here. You don't have to guess. You look at the level, or actually you literally set an alert once the 0.5 is hit. Look at the reaction. No reaction, you look for the gold pocket. If maybe there is no reaction right here, you look for the top of the range. Very, very simple. No guessing. You have the plan. You are not looking for random buy positions. After, of course, we have already gotten quite a nice push towards the upside without any proper rejections right here. And yeah, pretty much right now, let's just see how high Bitcoin is going to be able to go. And ideally, we are looking at least for the 0.5 here, 96,000, if not even higher, towards our bigger area of resistance, value area high. Technically speaking, if the value area high right here does get a break up, bullish indication of Bitcoin, simply because acceptance above the volume level, it is definitely a bullish thing, right? So if we get accepted above this, probably we are going to be looking straight towards the top of our horizontal range, 98,000, but yeah, ideally also 98,500 US dollar area. Now, what is going to be a red flag? Something you should also be aware of once Bitcoin does start moving lower. Now, I am in 2 long trades. On Bitcoin and XRP, I am holding still a long trade, but I took some profits off the table once Bitcoin hit the golden Fibonacci ratio right here. So, the bearish thing is going to be start losing, first of all, the bottom of the range right here. In my opinion, major red flag. If we start going, for example, we go up right now, we get a rejection. Losing the bottom of the range here, in my opinion, major red flag. The first major red flag, losing the bottom of the range. The second one is then going to be going below, again, the volume levels. Volume levels, in my opinion, are something you should really pay attention to because, yeah, I mean, acceptance above the value area high is the bullish thing. Acceptance below the level, bearish thing. So losing this level right here, 93,000, it's probably going to mean 1, 2, 3, fourth one was then formed. We are looking for the fifth one. If we get the acceptance below 93,100 US dollars, let's just say. Very simple plan. Pay attention right now to the levels because right now this one is also going to be a very important one. If lost, major red flag. In this scenario, we are going to look for much lower targets. Now, what is going to be the lower target? You're probably right now asking for the fourth Elliott wave. So technically speaking, we can be looking for Fibonacci levels, but also I really like to go, usually liquidity levels are the best ones to target, right? So we have only 2 important liquidity levels right now on the daily time frame. The first one is going to be this specific low. This is the first liquidity level, and then we have the second one at 74,400. Those 2 levels are the 2, are the 2 most important liquidity levels, right? The second thing you can be looking for are going to be Fibonacci levels. Now, if we topped out here, we go with Fibonacci, we go from the high to the low, back towards the high. In my opinion, the most important one is 1-to-1. And without the log scale, it is coming in exactly at the liquidity level. With the log scale, it is coming in almost exactly at the liquidity level at the upper one. So what we can say, it really depends how the structure right here is going to look like, but the thing is, at least 80,500 is the price target. Then if lower, we are going to be looking towards 74,400 US dollars right here. But most importantly, we take the low right here. 1, 2, 3, 4, 5. Structure finish. And then we are looking at least for a 3-wave move back towards the upside. So once we are going to be at this area, bro, trust me. Once you're then going to look at the crypto fear and greed index, probably this one is going to be in the extreme fear, which, yeah, I mean, people are going to be scared. People probably are also going to get liquidated on the entire move up, on the entire move down. And yeah, I mean, if something like this is going to happen, definitely I am going to be prepared to be buying even more, not only major long trades on Bitcoin, but also I'm going to look to fire major long trades also on many different altcoins. The trading bots are going to be buying the dip. Actually, more about the trading bots slightly later, because I found out right here something very interesting that I also want to share with you. But first of all, actually, before we also right now talk about one very important thing here, I would appreciate if you go below the live stream and click the like button right here. Maybe 500, 1,000 likes possible. I would really appreciate it. And of course, also, if you want, you can subscribe to the channel. Let me look at the chat right now a little bit, because I'm just curious, what do you think? Maybe if you agree with me or no. But then we need to go through some other very important things. RSI indicator, and also the CME futures chart, and also potentially I'm also going to go through the market structure and exponential moving averages. But let me right now look at the chat a little bit to see what you are saying right here. Yes, stock market. Oh, stock market is closed tomorrow. Probably they have some kind of a holiday or something. Let's see. We are going to talk about the CME futures chart. What do you call a reaction exactly? Because you have some kind of reaction on most Fib levels. Usually, I'm simply looking, pretty much, as I said, some kind of a reaction. I mean, if you pay attention to the liquidity level, for example, let me show you this. I mean, with the liquidity levels is the simplest, right? You get a push towards the upside. You have the liquidity level 0.5 above. Closing the candle below the liquidity level is a reaction. Bearish indication, you can be looking for a short trade here. If we then go higher, you have the golden Fibonacci ratio, right? The golden Fibonacci ratio, you don't have the liquidity level right here. So I would be looking for a bearish candlestick pattern. Now, if you're in Discord, go in the resources, where you can then see there are 3 good entry models. The best one, entering when there is absorption happening at the key level. Then, of course, for this one, you need to be looking for bullish or bearish CVD divergence. Depends, of course, if you're at support or resistance. This one, of course, is the best one. Then you have entering on a bullish bearish candle close. This, of course, looking only for the reaction. Or entering exactly at the key level by presetting a limit order. This one, it's slightly more risky, but definitely very useful in the middle of the night when you cannot be looking at the chart. So yeah, the reaction is literally a reaction. Looking for a push up, close below the level. This of course clearly is going to be a reaction, and you can be looking already for some kind of a short. Okay, I see. Stuck in 3,180 Ethereum short trade, please guide. Unfortunately, I cannot provide you with any guidance on your trade because unfortunately, I don't have a license to be a financial advisor. Maybe in the future, I could get a license to be a financial advisor, but at least right now, I don't have it. Everything here, what I say, it's my pure own opinion. So yeah, unfortunately, I cannot provide you with any guidance there. But if you're in a short 3,000... yeah, it looks like you are right now being slightly underwater. I am going to do technical analysis on Ethereum slightly later. One thing I would say, you probably did not use a stop loss, which, yeah, I mean, in my opinion, it's not the best thing. Would you agree that another new low around 75k would be bullish in the longer term and would make room for a new all-time high? Very, very long term, yes, but short term, I'm speaking for half a year, let's just say, I don't think so. Because low here, it's a 5-wave down, right? A 5-wave move down, which usually means it's the first part of a correction, which is then going to be maybe some kind of an A wave, B wave. Sure, we can make another all-time high, but it's still going to be a corrective wave, after which we are then expecting another 5-wave move back towards downside. So, of course, could be bullish, but only for a short push towards the upside, maybe also, of course, another all-time high, but then, of course, ideally looking for a bigger push towards the downside once again. Let's see. Bro, why are you spamming? Let me just go here. Okay, like this. Let's see. Please tell us the time frame to look for rejection. Usually I use 30-minute time frame. Or also 1 hour time frame. Those, in my opinion, are the best ones to use. Yeah, the gap is still at 88,000 approximately, exactly. Okay, right now, let's go directly towards our exponential moving averages. And then also, we are going to go with the market structure. So, looking right on EMAs. On the 1 hourly, we are still in a beautiful uptrend. Probably if we are going to go towards our liquidity level here, we are going to be, let me actually remove those. Actually, I'm going to have this one still on. We have, if we hit this level, probably EMAs, of course, are still going to be crossing towards the upside. They're still going to be bullish, right? So, I mean, right now, EMAs, 1 hourly, 2 hourly, 4 hourly, looking bullish, beautifully. So, nothing to complain about here. The problem is market structure on the 1 hourly. We did break our bullish market structure towards downside. We took the low here. So, we have high, higher low, higher high, higher low, higher high, lower low right now. So, market structure on the 1 hourly is bearish. And also, when you go with the line chart, it is clearly a lower low. So, right now, yeah, I mean, if you look like that, this right here could be the first bearish indication for BTC. Not saying we cannot continue higher. It really depends how we are going to right to move higher. And yeah, if we are then going to get some kind of a rejection back down here, if it happens, I do think the top is probably in. We are looking for a bigger push down below 80,000 US dollar area. Now, what about the CME futures chart? Because the CME future chart right now, you can see we closed at approximately $95,600. Right now we are at $95,300. So for us to technically, I mean, the price is not exactly the same on the CME futures and also on the Bybit chart, for example. But let's just say we push towards the upside, towards 95,600. We literally need to go above the highs here. We take the highs like right here, we go towards the gap, we fill the gap, and then we potentially can move lower, right? So this is definitely something I'm going to be paying attention to. Also because, like, again, the liquidity levels are something very important, right? So you go like this, you have first high liquidity level, second high liquidity level. And also I do believe, look at this, let me see. Let me zoom in on the 15-minute maybe. Did this high take? No, it did not. Okay. So you also have liquidity above this high and also liquidity above this high. So you have 1, 2, 3, 4 liquidity levels at the exact same area. 95,000, let's just say 800 is the upper one. That is why I personally prefer the upper one here. Also because, of course, we have the 0.5 here, Fibonacci level. And yeah, this area, liquidity level, definitely an important one. And I wouldn't ignore this one, definitely not. Also because we know it is aligning with the anchored VWAP. So potentially, we go higher, we fill the CME gap, we hit our 0.5 that is slightly higher than the liquidity level, and then we get a bigger drop, which is then going to mean we have 1, 2, 3, 4, 5, we got A, B, C correction, and we move lower. So again, losing the bottom of the range, in my opinion, it is going to be a major red flag for BTC. Pay attention to this, because if it does happen, yeah, we can be looking for actually a much bigger push towards downside in the upcoming weeks, let's just say. So this is going to be in terms of the liquidity level and the anchored VWAP, but also when we go with the RSI indicator, look at this, at least on the 1 hourly right now, we are getting a very slight hidden bearish divergence. I don't think it is anything significant. You can see here, higher high on the RSI. Well, let's go like this. And then we have a slight lower high on Bitcoin. I don't think it's a major bearish indication, to be honest. So this right here, like, yes, it is there. It is a bearish divergence, but I don't think it's anything significant. That is why I still do think this area at least is going to get hit. Not a financial advice, not saying it is going, I mean, high probability it is going to get hit. Let's just say like that. This level hits, and then we monitor the reaction. Are we going to get a rejection or not? But clearly looking at the liquidity levels, this right here is a beautiful liquidity level. Another liquidity level, I mean, if you look like that also, it is going to be above those highs. Those highs right here, we have one liquidity level, if you look like that, second liquidity level, and also then the third liquidity level. So if you look like that, you also have quite a significant liquidity level above the highs here. In this scenario, yeah, we are then going to break the golden Fibonacci ratio. We go above the golden pocket. I do think it could potentially be the 0.76. Let's go with this one. Yeah, it is going to be 0.76. So yeah, like, again, if you're looking for a short here, the stop loss placement is very simple. You go with a short, you can be looking again, as we said before, to enter something here if there is a reaction, enter something here at the golden Fibonacci ratio, and enter something potentially also here. But again, depends how we are moving up. If it's impulsive, I wouldn't be looking for such aggressive shorts, because in this scenario, we are going to go above the high. But the stop loss placement above the high here, your average price potentially can then be the golden Fibonacci ratio, and then the target is going to be, let's go with pretty much the previous low. It is 12 to 1 risk to reward. Now, one thing I want to point out here. If you go with this short, let's just say, right? We go higher, you get stopped out. You lose a trade. Okay. What we said before, if we are going to go higher, above the high, what is then the next level for us to go with? Or actually, where we are looking for another trade? It is going to be the top of the range, the 0.5 Fibonacci retracement level that is going to be at $98,500. You get stopped out. You're going to say to me, bro, you were wrong. You lost a trade. But the thing is, personally, I much rather lose a trade that has a good risk to reward ratio than to go with only one trade. I don't lose it, but the risk to reward ratio is bad. So what do I mean by that? For example, you go with this specific trade. You target another lower low here, right? So the risk to reward is 12 to 1, let's just say. This trade is 12 to 1. You get stopped out if we get a push towards the upside. Okay? You look for another trade. If we get then, of course, another entry trigger, you go with a short trade. Let's just say you enter, I don't know, below the high here. Let's just say at, I don't know, $97,400. Stop loss placement exactly above the high. Let's just say we hit the 0.5 almost exactly. It is going to be approximately here. in this scenario, what is going to be your risk to reward? So in this scenario, you lost already this trade, but then you go with another one. So the target is the same. You have 14 risk to reward. Remember, you lost this one, so it's going to be minus 1R, 13 plus, you're going to be plus 13R with those two trades, right? You're going to make, I mean, if you look like that, wait, let me just try to be slightly more clear. You're minus 1R, you lost the first one, but then you're plus 14R, which means you're net 13R in a plus, right? You definitely made money on the trade on the second one, not on the first one. The thing is, what if you go with one trade with a wider stop loss? What you can then do? You go, let's just say, you enter something at the liquidity level, then something at the golden pocket, then something at the 0.786. Then you have a stop loss, which probably then is going to be above the 0.5. Maybe you're also going to have some breathing room, which let's just say you're going to have the stop loss at approximately 98,900. You then also add something to your trade if we are then going to get a rejection. So let's just say your average entry price is approximately here. Look at the risk to reward. It's 9 to 1. You go with one trade, you don't get stopped out, and the risk to reward is 9R. You go with two trades with a tighter stop loss, net profit is 13R. What is the difference here? 9R and 13R, you're literally 4R difference with going with two trades versus only one trade. Some people do prefer wider stop losses because if you get stopped out more times, of course, it can be maybe slightly more mentally challenging, let's just say. But the thing is, the math is there. Usually, it is better to get stopped out more times and to go then with another trade because simply you usually make more money with a tighter stop loss. Of course, if you know exactly where you're entering, if you know exactly where you're taking the profits. So this example, in my opinion, it is better. You look for a trade here. Sure, maybe it's not going to play out. You have a stop loss above the high. You get stopped out. If it does play out, bro, if it does play out, your average price is, entry is, let's just say golden pocket, it is 11.5. Let's just say 11 risk to reward ratio. You're going to be plus 11 and you're not going to be losing the trade. If, of course, we dump from here. But you get stopped out, then you look for another one. You are going to be minus 1R at the start. But the thing is, another trade with a tighter stop loss, usually it is then going to outperform one trade, one single trade. You don't get stopped out, but then simply your risk to reward is going to be much worse. Hopefully, I right now explained this nicely. If I did, of course, you can tell me right now in the chat. Hopefully, you do understand what I was talking about right here. But most important thing is, in my opinion, tighter stop loss, better risk to reward, slightly lower win rate because, of course, you are going to be losing more trades. But yeah, overall speaking, at the end of the day, usually you are going to be making more money with a tighter stop loss, let's just say. Okay, let me just right now see smoking weed again. I mean, I don't smoke anything, so not sure where you got this from. Ricky boy. What do you think about chopping price action? 96, 93, 98, 74. You're right now saying we are going to be chopping around this area for some time. Sure, it could happen, but ideally, I'm looking for a rejection already in the... Let's just say in this week, ideally, we get already a bigger move. Ideally towards downside. So, yeah, we'll see. It's called recession. Ever heard of it? Lol. You're saying about the... You're right to think about the, like, if we get lower, I wouldn't really call this one a recession. It's just a corrective move on the daily. So, I mean, unfortunately, I cannot agree with you on this one. I would just say corrective move, looking for a buy below the recent lows. Are we in a recession or no? I don't know. I don't really, if you look like that, I don't care in terms of trading if we are in a recession or not. I just trade the chart. So right now, because of that, I just also want to talk about very slightly about those trading bots. As you probably know, I have been using them right now for the past, you can see, almost 2 months. 58 days are right now running, both of them, on Bitcoin and also on Ethereum. We have made exactly 16% on return in the past 2 months. Which, if you look like that, it is literally 8% return per month. Is it good or is it bad? In my opinion, it's actually quite nice. But something I noticed here. Look at this right now. With those trading bots, it looks like it is better to fire them on more volatile assets, which usually are, of course, altcoins. Why so? Look right now at the grid profit. Or actually, first of all, let's right now look at the actual investment, which of course it is exactly the same, but the leverage is different. With Bitcoin, because it's simply it is a bigger coin, slightly less volatile, I went with 3x leverage. For Ethereum, I went with 2x leverage. So it means, if you look like that, 2x leverage times 15,000 is 30,000 US dollar as the actual investment. I do have extra margin here, 10,000, but the thing is, only looking right now at the actual investment, 15k times 2 is 30,000. 3 times 15,000 is 45k, right? So clearly, the position size on Bitcoin is higher. But the thing is, the profit is lower. 3.9 thousand versus 4.2. So clearly, we do have a difference in profit. And also, the grid profit, because this one is more volatile, is also bigger, is higher than the one on Bitcoin. So now me logically thinking, it might even be better for us to deploy even more bots on different altcoins. I'm not going to do them right now because the thing is, if we do get a push down, I do want to deploy them once we are going to be trading below our recent lows. And if Bitcoin does get a major push down, I am going to be deploying more bots and also, of course, more capital to the Bitcoin and Ethereum bot. But also, I want to go with a bot on XRP probably, a bot on Solana, and also probably I'm going to go with another altcoin. Maybe Cardano, maybe Chainlink, maybe also something else. I'm definitely going to try and figure it out. But the thing is, it looks like those trading bots right here, the grid trading bots, do work better on altcoins because they're simply slightly more volatile. And also, again, I'm using a lower leverage versus BTC. Sure, I think it's quite smart for us to be using a lower leverage because if we do get a bigger push down on Bitcoin, usually the altcoins are moving much more significantly, right? That is why for the XRP one or Solana one, I'm definitely going to also be using, I think, 2x leverage, maybe even 1x leverage. I'm going to see how I'm going to go with it. But the thing is, right now, it is still being in a very nice profit. The thing is, if we do get a push down, Ethereum and also the Bitcoin bot are actually going to be buying the dip. If you want to be using them, you can definitely sign up on Pionex using this specific link down below in the description. You then deploy, I mean, if you're going to create an account, you register, you get 50 USDT. You then deposit, you got even bigger bonuses. For example, you deposit 5k, you get $800. You deposit 10k, you get $1,000. But also, you can then deploy them, the exact same ones as I have right here with this specific link in the description. Now, one very important thing I want to point out. If you deploy them right now, where Bitcoin is at the moment, and we do see a rejection back down, they are going to go in a very slight loss because they are going to be buying the dip. And of course, if we then simply continue lower below the recent low, you are probably going to be in a loss. But once we are going to get a bounce, you are going to have a beautiful position size. So the bot is going to be buying the dip for you. And once we get a bounce towards the upside, you are going to be in a profit. In my opinion, this right here is a form of some kind of a passive income. You buy the dip once we are going lower, and then you are selling on the way towards the upside because the bots right here are going to be taking the profit for you. So sure, you can go in a loss. Even, for example, if you're buying spot Bitcoin, spot Ethereum, you can go in a loss if you're going to be buying right here. But the thing is, lower we go, the bot is going to be dollar cost averaging into the trades right here. And once we get a push towards the upside, it is going to be taking the profit for you. So right now with this current situation, the bots, I mean, clearly they have been in a very nice upslope, let's just say, because this choppy price action has really been the best price action for both of the bots. That is right now why I also want to go through Ethereum and also XRP very quickly, because the reality is, if Bitcoin does get a push down, Ethereum probably is going to follow. So what I'm right now expecting on Ethereum to happen here. The thing is, if we are going to go lower, as you probably maybe also are expecting, I'm looking for one of the best targets you can imagine, because you have the golden pocket here. Actually, I'm going to go with the other log scale. You have the golden pocket here. You have the anchored VWAP, you have the point of control of all of the upper price action. This right here, bro, remains the best long trade buying opportunity, in my opinion, on Ethereum, if it's offered to us. I have also an alert right here where we can be looking for long trades, where I'm going to be adding even more capital to my Ethereum bot. So the plan is very simple. If Bitcoin does get a rejection, Ethereum gets also probably a rejection back down. So right now, let's just see what's going to happen right here. Ethereum, to be honest, in my opinion, does look slightly stronger than Bitcoin. That is why potentially for Ethereum, we might be looking for this specific high if we are going to go, of course, higher, 3,447. Then, of course, if we are going to get a push up here, rejection below the liquidity level, we might be looking for a short trade, stop loss exactly above the high that is going to be formed, targeting at least the low here, maybe first take profit, second one, the golden Fibonacci ratio. Bro, look at this risk to reward. 16, 17, maybe even 20 to 1 risk to reward. Depends, of course, where you are going to be taking the profit. But the reality right now is, I do think looking for a short right here, in my opinion, it is better than firing a long trade. Not saying we are going to get a rejection, but if the rejection does happen, the risk to reward of the trade right here is just amazing. Also, XRP. The best trades, long trades, I'm saying, for XRP, in my opinion, are approximately at the bottom of the range. For XRP, I would say you can use the log scale or no. The most important thing is I'm looking at least for the low right here, or maybe even towards the bottom of the range here at approximately $1.6. So for XRP, I would say if you're not already in a short, like I do think right now going with a short on Bitcoin and Ethereum is slightly better than going with XRP short, because with XRP short, like, I don't think we are going to move above this high. If we start moving above this high, then you have the stop loss above this high. You could potentially make it work. But the thing is, risk reward on Bitcoin and Ethereum is better than on XRP. So that is why I do think going with a short trade on XRP and Bitcoin is better than going with a short trade on XRP right here. But also right now, a good short trade potentially that can be offered to you is going to be in Solana. If you are in my free VIP Discord server, 4 days ago, I posted this one right here. Solana hit a nice liquidity level, forming a bearish divergence on the RSI indicator. So definitely, also on Solana right here, I do think if we get a rejection, like bro, look at this. If we get another push up, right, we take the liquidity above the high, your trade is probably going to be a short here, a short from here, stop loss above the high, targeting a new lower low, which in this scenario is going to give you approximately 8.5 risk to reward. Also a beautiful one. If we go even lower, of course, even better. But the thing is, Solana, in my opinion, also looks like this entire move up is some kind of a correction. So actually, this entire structure, it looks very corrective. That is why Bitcoin, Ethereum, Solana, XRP, ideally, I'm looking for a bigger rejection. If it does happen, our short trades are definitely going to be in a very nice profit. So let's right now see what is going to happen at this specific area. If we do get a rejection, would be, in my opinion, a very nice thing. If not, if we go higher, I do remain in my trading bots right here, long trading bots, and also I do remain in my long trades on Bitcoin and XRP. But in this scenario, I am going to get stopped out on my short trades. Let's see. If you go to the weekly and count a 5-wave move up, could this be an ABC? Now in CLAC, if we sweep but hold 80,000, could we get a new macro 5-wave move up? Wait, if you go to the weekly and count a 5-wave move up, could this be an ABC now in CLAC? If we sweep but hold 80,000, could we get a new macro? I see what you mean right here. I think you mean something like this on the weekly. Wait, on the weekly, a 5-wave move up, and then we sweep 80,000. So you're right now saying sweep 80,000, and then I pump it towards the upside and count 1, 2, 3, 4, 5. It really depends how you count this entire structure towards the upside. I am counting it as for example, this one right here being already the rising. Actually, not this one. I think we were going with this one, right? I think we were going with something like this. 1, 2, 3, 4, 5. We have the rising wedge, and now potentially looking for a bigger ABC. Maybe also then another ABC, and then bigger, maybe even ABC down. Depends. I mean, yeah, I'm right now going very much in the future, but the thing is, my main scenario right now, at least on the weekly here, is this one. In my opinion, is this one. We got A, potentially right now. B, we can also form a new all-time high here. Then C. Something like this is the first part of a correction. Then, of course, we are going to go from there. But the thing is, at least right now, I'm still being slightly more patient here. Potentially, yeah, the top can actually be in, let's just say at approximately 126,000. But yeah, only time will tell, of course. Let's see. If Bitcoin is bearish, why you don't close your long on Bitcoin and Ethereum? Because what if we are bullish? Of course, I mean, the thing is, when we got a push up, I took the profits on my long trade, right? It's pretty much risk management. It's very simple risk management. We got a push towards the upside at the gold pocket. I fired a short, I took the profit on the long trade. I paid myself, I already made money. If we are right now going to start losing the bottom of the range, I am probably also going to close my long trades. In this scenario, I only remain in the short. I made money on the long, looking for lower. I have not closed my my long trades just yet because the market has not really confirmed that we are actually going to go lower, if you understand what I mean here, right? So if we are going to then confirm we go lower, we lose the bottom of the range, we get acceptance below the volume levels, as we were saying before, I'm going to close the long trades, only remain in the shorts. Simple as that. Until then, I still want to be in the short trade, in the long trade, because what if I am wrong? It's all about risk management. Omega, this is live. Hey, Bitcoin Hyper, you're one of the best decent crypto YouTubers. Thank you very much for saying that I'm decent. Trying my best, let's just say, to provide you with highest quality content. In terms of trading, I do think I don't watch other people in terms of YouTube and also on Twitter. I don't watch any other trading setups. But in terms of trading setups, I do think I don't want to be like... The thing is, I do think I have one of the best trading setups out there. I don't watch other ones. You can, of course, confirm or deny this. But in terms of my trading setups, I do think I trade actually very, very well. So, yeah, trying my best. Let's see. Waiting also to make a rejection to open short positions. Yeah, so right now it is up to you if you want to be slightly more aggressive or not. But yeah, personally, I am already in a short. I mean, my plan, you probably already know it, right? So if you're in the free VIP Discord server, let's see. I shared this setup with you already, like a very... I mean, we need to go with Bitcoin. I shared the setup with you a very long time ago. So it was right here. This remains the best trading setup. We hit the gold pocket, we get a rejection. Let's see right now if this is going to play out. If not, I mean, I get stopped out in the shorts, sure. But yeah, right now, I want to be in the short trade because if we go lower, we are definitely going to be printing some beautiful profits. And yeah, with this being said right now, thank you everyone. Actually, let's see this one. Yeah. Thank you everyone for watching today's cryptocurrency live stream. If you enjoyed it, I would really appreciate you smash up the like button, you subscribe to the channel. If you want, you can sign up on many different exchanges because right now you're going to get a beautiful bonus on Bybit or also on Bitunics. Depends, of course, which one you're going to go with. If, of course, you want to trade with us, go with a short trade. You simply create an account on Bybit, you register, you get $20 US, you deposit $100, you get another 20 USDT. So definitely check out the exchanges using the links down below. With it being said, thank you everyone for watching today's cryptocurrency live stream. See you tomorrow on the channel because I am probably going to make another video. But until then, again, thank you for watching. See you tomorrow. And of course, peace out.
Vitalik, clapping. Vitalik, impressed. Happy and clapping. Vitalik is impressed. Vitalik clapping, 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 clapping.